This might be the most important video that you ever watch. The market is showing us something right now that everyone is missing. And this happens every single cycle. I'm not here to sell you anything. I'm just going to tell you exactly what is happening. While everyone is celebrating all-time highs, the system is breaking from the inside out. This happens every single cycle. They ignore all of the warning signs. And so I'm going to run you through why I think this could be the biggest bear run in history. And if you're a trader, you should be happy about that. The system that enslaves all of us is cracking and breaking from the inside out. And we can take advantage of that. We don't have to just wait for bull runs. We make money on the way up and we can make even more money on the way down. And so let's jump into my computer. I'm going to run you through exactly what is currently happening. Before I go into detail explaining exactly what's happening here in the market, we need to understand why a recession occurs in the first place. Why does the economy crash? It is completely purposeful. It is simply just a wealth transfer. The poor continue to get poorer and the rich continue to get richer. The economy crashes, the rich buy all the assets off the poor, so the gap between poor and rich gets larger and larger. We need to stop viewing a recession as a bad thing and see it as an opportunity as the rich do. Every market cycle we have, we get some key red flags that show up, indicating there's a good chance we're at the top of the market. And those red flags are flying right in front of our face as we speak. But the majority of people are ignoring them because we're at all-time highs, prices exploding to the upside, everyone's making money around them, and they start FOMOing into the market. This is pure human psychology. It happens every single time. All of that fear and FOMO stems from the fact that they don't understand they can make money when the market's going down. They think they can only make money in a bull run. They buy and hold on to things just hoping it goes up in price. And they don't understand the rich make all of their money when the market is going down. So now I'm going to show you the Wall Street cheat sheet. And this is pretty popular. You've probably seen it before, but it's important for us to understand it because it shows us exactly what a market cycle looks like. This right here shows us the human psychology behind the market cycles. And so what happens is the market moves up and it creates a peak. And this is the point of maximum financial risk. That's this point right here. Then the market moves down and we get to this area here, which is the point of maximum financial opportunity. That is this point right here. And this is where smart money and the rich start accumulating assets while everyone else is too fearful to get into the market. Then we start to see a rally to the upside because of that smart money accumulation that occurred here. Price starts moving up, but the majority of traders are stuck in disbelief. They don't believe the market's going to recover. They think this rally is going to fail like all of the others, expecting price to continue moving down. What happens is we go into accumulation. We're now in hope a recovery is possible. And this is where the majority of smart money start entering the market. The market then continues to rally to the upside and we come up into optimism. And this is where people think, you know what, this rally might actually be real. And it's at this point where the majority of smart money have already positioned themselves in this market. Then we move up to belief where it's time to get fully invested. And this is where a small amount of retail traders start stepping into the market. Smart money has already positioned themselves. And then we come up to thrill. I'm going to buy more on margin. I've got to tell everyone to buy. This is where the majority of retail traders start getting into the market. And then we have euphoria. I'm a genius. We're all going to be rich. Everything's going to the moon. This is where we are currently at. And this is where dumb money FOMO into the market. Why is it that dumb money always FOMOs in right at the peak of markets? It's because they have a fear of missing out. They think if they don't get in now, they're going to miss it. Everyone else is going to make money and they're going to miss generational wealth. They don't understand how markets work. They don't understand that markets correct themselves because they're overvalued. And that's exactly what we're seeing at the moment. The dark truth about all of this and what no one speaks about is that smart money has been marketing to dumb money the entire time, telling them if you don't get in now, this is the biggest boom we've ever seen in tech. This is the biggest boom in AI we've ever seen. This real estate market's going to continue going up. If you don't buy a house now, you're never going to be able to get in at these prices. That is straight marketing manipulation tactics by smart money. What happens is they then offload all of their assets to dumb money at extremely overvalued prices, and dumb money then hold on to that the entire way down, selling them back to smart money right at the bottom. So this is what we call engineering exit liquidity. It's been happening forever and it will always keep happening because it's the only way that smart money can actually exit the market. And so what do I mean by that? Smart money, as I was saying, they've been accumulating assets all the way down the bottom here. But now they want to sell those assets. When you're trying to sell something, You need buyers to come in, step into the market to buy what you are selling. And how do you get people to step into the market right at the top when everything is extremely overvalued? You tell them price is going to keep going up. This time is different. It's an AI boom. It's a tech boom. Whatever it is, houses are going to keep going up. Now's the time to get in. And then you offload all of the things you purchased at these extremely low prices to all dumb money at those extremely overvalued prices. And that's how they do it every single cycle. It's a complete distribution of wealth. So the most important thing right now during this current market cycle is identifying this point right here. And I think we are extremely close, if not at that point right now. The thing is, it is very hard to tell when we're at that point. It is much easier to identify this point right here. So what happens is you start getting smart money starts selling, you start seeing that move back up, retail start buying this dip, and they get absolutely wrecked as price dumps all the way down. This is the area that we want to look to get in with the rest of smart money as we sell off to the downside. This is the move we're currently trying to get. And so like I said, the majority of people have no idea they can make money the entire way down. That's what smart money do. They make money up, they make money down, and you can make a hell of a lot more money when price is running down because it runs so aggressively down. So what I like to do sometimes, get this chart, I flip it upside down, I flip it horizontally, and here we have the exact same thing. Instead of pressing buy, you're just pressing sell. You can see that manipulation to the downside, price comes back up, smart money positions themselves, and then price continues to run. It's the exact same thing, just in the opposite direction. Something that I get asked a lot at the moment is that, should I just buy the market now because it's likely to be bullish in the short term? And I say, well, what you're asking to do is, basically, let's say the market's currently here, you're wanting to risk your capital to likely make this move here. And that's if you sell at the extreme top. And like I said, it's extremely hard to pick that top. So you're going to catch this small move if you sell at the epitome top, which is highly unlikely. Otherwise, you could save your capital and then you could enter in on this move here, which is much likely. Instead of trying to extract the rest of the scraping the barrel, trying to get this move to the upside, just wait for price to want to turn around. You catch this entire move all the way down. Okay, so now I'm going to get into exactly why I think we could be extremely close, if not at, this market cycle's high. So the first one here is, let's zoom in. We can see the Euphoria indicator. Every single time it reaches this level in history, we have some sort of massive correction. And so the US stocks Euphoria indicator has reached its highest level in 4 years. That is insane. You can see the meme stock frenzy, we had that massive correction. And then the dot-com bubble, we also had that extremely massive correction. Okay, so the chart you can see in front of you is the M2 money supply in Q2 2025. M2 money is just the amount of money currently in circulation in the economy. We have never had this much money in circulation in the economy. The last time we did was the dot-com bubble, and you can see what happened there. We had an extremely massive correction to the downside, which is likely the same thing that's going to happen now. One of the biggest things that starts to happen when we get closer and closer to a recession is that the unemployment rate starts rising. And so at the moment, in the first 5 months of 2025, US employers announced around 700,000 job cuts. That's an 80% spike from the year before. It's over 4,600 people losing jobs every single day. We just had statistics announced that a massive downward correction of over 250,000 jobs for a single month. With AI coming in, it's only going to get worse. Okay, so first of all, shout out to Henrik for these charts. They're so nice. But on this first one here, you can see the S&P 500 continues to go up while job openings continues to go down. This is showing us a massive disconnect between the financial market and the economy. Down the bottom here, you can see unemployment is starting to rise. Whenever in history we've had a recession, we've had unemployment rise, recession, unemployment rise, recession, unemployment rise, recession. Happens every time, and we can expect it to happen here as well. Okay, so this chart that I have right in front of me, it's extremely important because it's exactly what's happening in the US at the moment. The Fed are about to cut rates. And so what you can see here is every single time the Fed cuts rates, we have some sort of recession. Here you can see the Fed starts cutting rates, we have a market top, and then we have a recession. Fed cuts rates, we have a market top, and then we have a recession. And right now we're at a market top. The Fed are about to cut rates. There's a good chance we get a recession. And down the bottom here, you can see unemployment starts spiking. That's when we get our recession. Unemployment starts spiking, recession. Unemployment starts spiking, recession. Unemployment starts spiking, recession. And here you can see the unemployment is starting to spike, recession. And so just in case the last few charts just weren't enough for you to understand what the hell is currently going on, here's another one. Shout out Henrik, you're a legend. And so here we have our unemployment RSI. Every single time, without fail, Our unemployment has reached 50% on this RSI. We have had a recession every single time without fail. Here, every single time. And so what is likely to occur here? It's up to you guys to decide. Okay, so here we have our next indicator, which is telling us that the market is currently extremely overvalued. And that's our concentration. So the top 10 US stocks hit a record 40% share of the S&P 500 in August 2025. And so what does that mean? Over half of the S&P 500 companies have recorded falling profits. Concentration is at a record high at 40% in July. And you can see it's 40.2% in August, and I can only assume it's higher now in September. And so instead of calling this the S&P 500, we should call it the S&P 10, because it's only 10 companies that are making this market currently rise. So this next chart here shows us the market cap weight of the top 10% largest US stocks. So not the top 10, but the top 10% largest stocks. The last time we were sitting at this high in the market, it was, yes, you guessed it, 1930, which is where we had the Great Depression. You can see price just fell down from there. And I don't see why things would happen any differently now when prices are so extremely overvalued like they are at the moment. This is just another bubble. And in history, every single bubble has popped, and there's no doubt that this one is going to pop as well. So now we're coming up to our last two charts. It's incredibly important to understand what these charts are showing us. So this first one here, the Magnificent Seven, which is the Mag 7, the 7 biggest US tech companies currently, 2%. The S&P 500, 2%. If you remove those 7 companies from the S&P 500, you get the S&P 493. That is straight flatlining. That is so unhealthy for the market. It means the only reason the S&P 500 is going up is because of all the speculation around the Mag 7. That is the only reason. It is straight speculation. This exact same thing happened in the dot-com bubble. Okay, so here we have the last chart, and this one is absolutely insane. It just puts into perspective the S&P 500 market cap. And so the market cap of the Mag 7, 18.8 trillion. The market cap of the bottom 433 companies total is only 18.8 trillion. The concentration right now is tipping so heavily one way. It is one straight bubble, one straight tech and AI bubble that will eventually pop. It's inevitable. So now that you've seen everything that I've just shown you, like I said at the start of the video, I'm expecting the biggest bear run in history, unlike anything we have ever seen before. I don't know exactly when it's going to happen, but all I know is the cracks are starting to show. As soon as it happens, I'll be able to capitalize on it. We want to turn off all the FOMO. We want to stop listening to anything outside of ourselves and start trusting our intuition, and then we can execute when the time is right. And so if you want to follow my journey on how I'm going to be navigating this time, you can follow me on my Discord. But apart from that, I'll see you guys soon.